Welcome to Talk Tickers. You're tuning in for our deep dive into the recent Brookfield Renewables earnings call. We've gone through the details, pulled out the key stuff you need to know.
And yeah, right off the bat, the overall feeling seems pretty strong. Brookfield Renewables is definitely showing some positive momentum.
Absolutely. I mean, the core financials look, well, robust. Funds from operations per unit, that's FFO, it's up, what, 7% compared to last year?
That's right. But you know what's really interesting is if you kind of adjust for that exceptionally strong hydro performance they had last year.
Ah, right, that comparison day.
Exactly. If you adjust for that, the underlying growth was actually up 15%. That really tells a story about the strength across, the rest of the business.
It does. And they pointed to a few key things driving this. First, just having assets spread out globally. That seems to give them a stable base.
For sure. Diversification helps. Plus, they highlighted successfully getting new renewable energy projects up and running, commissioning new capacity.
And strategically, they've been busy making investments, but also selling off some assets that were, let's say, mature to reinvest.
Yeah, that capital recycling piece. It's a big part of how they plan to grow, seems like.
We also heard about some good progress on the commercial side, locking in new business.
They secured contracts for an extra 4,500 gigawatt hours of generation per year.
That's quite a bit.
Yeah.
Suggests the demand is definitely there for their power.
It's a significant number, yeah. Shows the commercial teams are doing their job. And, of course, that big partnership with Microsoft keeps coming up.
Still a major growth engine, it sounds like.
Totally. It sounds like the initial 10.5 gigawatts they contracted might really just be the minimum for that deal.
You'd think so, with the amount of power data centers need these days. Operationally, they also brought, about 800 megawatts of new renewables online just last quarter.
Yeah, around 800 megawatts commissioned. That's a pretty fast pace they're setting.
Seems like it. They mentioned being on track to bring about 8 gigawatts online in 2025.
Which is like more than double the rate they were commissioning just 3 years back. That ramp up is really noticeable.
Wow, okay. And on the financial side, big numbers moving around. $4.6 billion committed or deployed in the quarter.
Yeah, though net, it was about $500 million out the door. That included finishing the Neowen privatization.
Right, taking that company private.
And also reaching a deal to buy National Grid Renewables. Those are, pretty substantial moves.
Expanding the footprint significantly with those. The Neowen deal, that boosts them in Asia Pacific.
Primarily Australia, yeah. Especially in wind and batteries there. And National Grid Renewables adds a lot in the U.S. operating assets and a development pipeline.
But it wasn't just buying, right? They sold some stakes too.
Correct. They monetized some operating assets, like part of First Hydro and phase 1 of their India portfolio sale.
And got good returns on those.
Apparently quite good. Generating significant returns. I think the call mentioned nearly tripling their investment in some cases. It shows they can, build, operate, and sell smartly to fund the next thing.
Okay, let's maybe dig a bit deeper into some specific areas they covered. The whole energy market environment was obviously a focus, especially with, recent policy talk.
Yeah, they talked about strong fundamentals, basically digitalization, reindustrialization. It's driving energy demand faster than supply can keep up.
And their view is we need everything.
Pretty much an any and all approach. Renewables, sure, but also natural gas, batteries, even nuclear. Renewables like onshore wind, solar, batteries, they see those as critical, though. Low cost, fast to build, mature supply chain, and importantly, not dependent on imported fuel.
Right. And supply chain resilience came up. Sounds like they feel well-positioned despite potential challenges.
Yeah, the message was their scale helps a lot. Global supplier relationships, how they approach development, and they've actually been sourcing more domestically in the U.S. lately.
Okay.
Plus, a key point, most projects under construction have fixed-price EPC contracts. That really limits their exposure if costs suddenly spike.
That's a good hedge.
Definitely. And they even think recent tariffs might free up equipment supply elsewhere globally, maybe even lower costs outside the U.S.
Interesting dynamic.
Yeah.
Okay, let's shift to operating results and their financial position. Cash flow stability was a theme.
Very much so. Something like 90% of their operating fleet is contracted long-term. Average contract length is about 14 years.
Wow, that's locked in.
And around 70% of those revenues are linked to inflation. So good predictability. Their hydro assets are doing particularly well right now with favorable pricing.
Seeing good demand for hydro.
Strong demand, yeah. from utilities, but also big corporate partners. And looking ahead, they see a chance to recontract about 6,000 gigawatt hours of hydro over the next 5 years, likely at better rates.
So potential upside there. And wind and solar.
Performing well, boosted by new capacity coming online and acquisitions. And it was interesting to hear about the distributed energy, storage, and sustainable solutions segments showing significant FFO growth there, too.
Those newer areas are starting to contribute meaningfully then.
It seems like it. And Westinghouse, their nuclear business, also performing well. Growing demand for nuclear power is helping that.
Right, the whole energy transition push and the balance sheet.
It's solid, $4.5 billion in available liquidity. They also did an opportunistic debt issuance, 450 million Canadian dollars in 10-year notes. And they've been buying back their own units, about $35 million worth year to date, seeing it as a good use of capital.
Okay. Now, tariffs. That's been a big question mark for the sector. What was their take on the potential impact?
They basically downplayed it, saying they don't expect a material impact, largely because of how they buy things and where they buy from.
Global diversification helps again.
Exactly. They don't import a ton directly from China for U.S. projects. They did acknowledge tariffs could mean slightly higher costs, maybe slightly higher power prices in the U.S.
But manageable.
Yeah, they framed it as manageable, like low double digits to teens kind of increase. And they think they might be able to pass some of that cost through to customers and still be competitive.
And sometimes the tariff risk is on the supplier anyway.
Often, yeah. Especially with fixed price contracts. Plus, the U.S. market's been profitable for suppliers, so there might be some cushion there to absorb costs. And like we said, it could mean better availability or prices elsewhere.
Gotcha. Let's talk Microsoft again. That framework agreement is clearly huge for them.
It's their biggest, yeah. And it seems it let them de-risk a lot of development and sign contracts faster without having to slash prices.
That's key.
And they're getting a lot of calls from other big companies wanting similar deals, so maybe more large agreements like that coming in 2025.
Interesting trend. And the data center demand itself. Microsoft had some news about leases recently, but...
Yeah, they addressed that. View it more as optimization, not some fundamental shift away from needing massive amounts of power. They're still very confident in that partnership and see potential well beyond the initial 10.5 gigawatts. The supply-demand gap for data center power is still, pretty wide.
Makes sense. Okay, the Neowen acquisition. Big move in Asia Pacific. What's the plan there?
So the main action is in Australia. Wind and batteries are the focus there. Seems there's a premium for power you can dispatch when needed.
Just flexible generation.
Right. So the plan is to basically accelerate Neowen's development, try to double how quickly they bring projects online, and they'll plug Neowen into the bigger Brookfield platform for, better financing, procurement muscle, access to big customers.
And capital recycling comes in again.
Yep. They plan to sell off some of Neowen's operating or under construction assets eventually, sell them to buyers who maybe have a lower cost of capital, and then reinvest that cash back into more development.
Right, keep the development engine churning. Now, the hydro recontracting you mentioned earlier sounds like a significant opportunity.
It really does. If they can recontract that capacity at current market rates, it could mean a pretty substantial bump in EBITDA, in earnings.
And these new long-term contracts at higher rates could help them finance other things too.
That's the idea. Creates low-cost ways to raise money. Up financing opportunities, they called it, for new growth, or M&A. And like we said, corporates are showing more interest in hydro now, too.
So they'll try to lock those in efficiently.
Yeah, efficiently and expeditiously was the phrasing, I think. They want to capture that value. How they'll bundle the contracts, though, sounds like it'll be case by case.
Okay. And lastly, they touched on maybe looking at public market opportunities.
Primarily in North America, yeah. Just because that's where most public renewable companies are listed, they see consolidation happening.
Makes sense. It's capital intensive.
Very. And public market volatility makes it tough for some companies. So while uncertainty might slow deals down at first, companies needing capital might have to look at strategic options.
Like take privates or carve-outs.
Exactly. Carve-outs like the National Grid Renewables deal they just did, in addition to potentially taking whole companies private.
Okay, so quite a few moving parts there. Stepping back then, for investors listening, what are the main takeaways from this call?
Well, first, the strong underlying growth in FFO, especially adjusted FFO, signals the core business is healthy.
Right, despite that tough hydro comparison year over year.
Exactly. Second, their ability to manage potential tariff impacts through diversification and smart procurement looks pretty effective so far.
Resilience seems key.
Definitely. Third, The big strategic moves, Neowen, National Grid Renewables, the Microsoft deal continuing to grow show a clear focus on future expansion and value creation.
They're actively deploying capital.
And fourth, you've got those potential upsides from hydro recontracting, maybe some public market opportunities, and Westinghouse doing well. So several pathways for growth.
All right. That brings us nicely to our This Is Not Financial Advice segment. Time for an outrageous but plausible trade idea based on all this. You go first.
Okay, outrageous but plausible idea number one. Thinking about that massive energy demand from AI and data centers we discussed, and Brookfield's big push into renewables. How about this? A long position in a company specializing in advanced grid management tech, specifically tech that helps integrate huge amounts of renewable power smoothly, especially for those power-hungry computing loads.
So not the power generator, but the company enabling the grid to handle it.
Exactly. As clean power for AI becomes critical, the companies optimizing that energy flow could be in a sweet spot. The picks and shovels for the clean AI boom, if you will.
Interesting infrastructure play.
Yeah.
Okay, my turn. Outrageous but plausible idea too. Staying with energy, but focusing on storage and maybe energy security themes.
Okay.
Consider a long position in a lithium mining company, but not just any lithium miner, one that's really focused on sustainable extraction methods and has supply deals locked in with battery makers serving the North American grid-scale storage market.
So betting on the need for storage and maybe a preference for ethically domestically sourced materials?
Kind of. As more renewables come online, grid storage becomes non-negotiable, right? So reliable, maybe even more localized, lithium supply could be super valuable.
Both interesting ideas. Definitely plausible, maybe a bit outrageous, but crucially, as we always say,
This is absolutely not financial advice, just brainstorming based on the trends.
purely speculative. Do your own homework.
Always. So to wrap up, Brookfield Renewables' latest call really painted a picture of, well, strong performance overall. Strategic growth is clearly underway, and they seem to be navigating a pretty complex energy world effectively.
Yeah, key takeaways are that underlying financial strength, the strategic expansion, managing risks like tariffs, and capitalizing on big trends like corporate demand for renewables and grid modernization.
Absolutely. Remember, folks, not financial advice. Always do your own research. And maybe think about this. What's the long-term impact of these giant renewable developers shaping our energy grids? What other innovations might pop up to manage all this intermittent power? Let us know your thoughts. Thanks for tuning in to Talk Techers.